These are the things that every single business owner must handle before tax season. Tax season is right around the corner, and I want you to succeed. If you wait until tax season to look at your numbers, I promise you, you're already too late. And it could cost you tens of thousands of dollars. All right, so in this episode, I'm breaking down the one, two, three, four financial tasks every business owner must handle before tax season so you can stop overpaying the IRS, avoid costly mistakes, and walk into tax season confident, prepared, and in control. All right, so here we go. Just so you're aware, these are questions that my clients ask me all the time. And instead of being on rinse and repeat and on the recorder, I want to make sure you understand that these are things that are inevitable and have to be done every single year by you, the business owner. All right. Number one, we have to reconcile your books, not just check your balance. Okay. And reconciling your books doesn't mean looking at your bank statement and saying, great, I think things are amazing and my bank balance balances. All right, what does this actually mean? If you have an accounting software or if you're just exporting your data into Excel and labeling it, all of this has to be done. So we have to make sure your bank accounts, your credit cards, your loans, your payroll, your merchant processing accounts all match your accounting records. A lot of the times, what you'll see is there's a difference between what the statements actually say versus what you have in your accounting. And that could be due to a lot of different things. Number one, you can have outstanding checks or deposits in transit that never cleared for clients that maybe you thought paid you but never did. Although in your accounting software, it says that they paid you, so you haven't been pursuing payment from them, where in fact, they never paid because it never cleared the bank and something else happened, right? There's certain things like payroll, for example. When you process payroll, typically what we see is that your bank will show you the net payroll. That's after withholdings, after deductions, after contributions. So the gross payroll is never really recorded. So there have to be adjustments made in your accounting records via journal entries or other adjustments that show you what you actually paid your employees. Otherwise, you're missing out on expenses because you don't have the accurate ones. Another thing that we've seen with merchant accounts, especially if you have your merchant accounts combined with your accounting software, if they're all syncing together, we've seen a lot of duplicate transactions because either the accounting software glitches or your merchant account glitches, and you may have duplicate deposits in there. So in that type of situation, you are overpaying taxes because you have too much income recorded. Another thing with payroll, oh, excuse me, I already covered payroll. With loans, when you make a loan payment, it's typically interest and principal. And a lot of individuals and a lot of business owners that we have seen, they will record their entire loan payment as an expense on the profit and loss, where in fact, only the interest is deductible and you can't deduct the principal. The principal deducts the actual loan balance. Okay. We want to make sure you don't have any missed deductions. In summary, we don't want you to have overstated income. We also don't want something in there that has IRS red flags. And most importantly, we don't want you to have a surprise tax bill. The whole magic of tax planning is to not have any surprises. All right. So the huge benefit is your clean books are going to have accurate records, accurate taxes, fewer mistakes, fewer questions from your CPA, which will reduce your bill from your tax preparer. faster filings, and you're going to save on taxes, increase cash flow, and keep more money in your pocket. That's the benefit every single time. All right. Number two, and I hope you're enjoying this so far. And please like our video, subscribe to our channel, and share this with one business owner that you believe will help as well. All right. Number two, make sure you do not commingle. This is one of not only a big pet peeve, but also it's a massive IRS no-no and can get you into a lot of trouble. So we need to make sure you separate personal and business expenses. Yes. So no commingling, period. Period, period, period. Business expenses need to flow through your business accounts. What we just talked about, your business accounts, your checking, your savings, your money markets, your loans. Okay? They need to flow through your merchant accounts. Those are all linked to your business. We want to make sure that you only run business expenses through your business. Commingling kills your deductions. It weakens audit defense and can pierce the corporate veil, which is very, very scary just by making this one mistake. So this is what you need. So we need to protect your deductions. And because you have the privilege of owning a business, we want to make sure that you are using it appropriately. Now, the question that I get asked next is, okay, but I lost my credit card or I misplaced it or I accidentally used my personal checking account or my personal credit card to charge a business expenses. What do I do? There is a workaround here. So number one, you already know that you shouldn't do it, right? So you're not going to do it in the future, but life happens. And when life happens, what we want to make sure is that you issue yourself an expense reimbursement form. You can make this super basic. I like using Excel, business name, what you're getting reimbursed for, right? So it's your business, expense reimbursement form. And then you're going to identify all the dates that you charge something personally that you need to get reimbursement for from the business. And this is very important. Yes, this makes you jump through an additional hoop or two. But this is how businesses run because remember, you're not your business and your business is not you. And this is how you prevent commingling. So in an Excel spreadsheet, list out your business expenses that you paid for personally. Date, what vendor, the description of what it was if it's not evident, and the amount. So that at the bottom of the Excel spreadsheet, if you haven't already done this for the 2025 tax year, for the prior year, before tax season, make sure you populate that. And you may be surprised when you go through your personal accounts and personal credit cards that maybe there's $200 or $2,000 or $15,000 or $30,000 of expenses that you never reimbursed yourself for. I want you to take advantage of that so that you will save on taxes, keep more money in your pocket, and have more cash flow. This is the way we do this, and it has to be done proactively because you do have to go through a whole year of your personal expenses to make sure you've identified all those items. One, make sure that, and I hope you're enjoying this and this is helpful for you. One, make sure that you document everything and you're actually looking at saving all those receipts personally. And in a moment, I'll go into what documentation is required. But before that, the third thing that you have to review is your actual profits, not your revenue. And this is where a lot of business owners miscalculate what their profits actually are at the end of the year. And this is where a lot of time their tax bill will become a surprise because certain things that's revenue isn't actually revenue. Certain cash outflow that you think are expenses aren't actually expenses. And certain debts are not expenses either. Okay. So why is reviewing your profit and loss very, very important instead of just your bank balance? It is because this is where tax planning occurs, and we want to make sure You pay less taxes, increase cash flow, and keep more money in your pocket. If you agree, share and like this video, and subscribe to our channel, please. This is how we would tackle this situation. After you've done the above items, reimburse yourself for any unreimbursed business expenses and account for all your information, we want to see what your main reports look like: your profit and loss, your balance sheet, your general ledger, and your cash flow. If you don't have enough time to get into your cash flow at the moment, we can pause and we can review that at a later time. But for tax prep purposes, we would need your profit and loss, balance sheet, and general ledger. The general ledger shows us every single transaction that came in from your source accounts, meaning your bank account, your savings account, your your loans, your lines of credit. Maybe you put in some shareholder contributions. We see all the activity. The balance sheet shows us your sources. It shows us your sources of banking, checking accounts and savings accounts. It shows us the sources of your loans, maybe high yield loans, lines of credit, other notes payable to other individuals, and it shows us the sources of what you contributed into the business or took out of the business personally. So that's the balance sheet. It summarizes everything at a snapshot in one moment in time. Whereas your profit and loss statement, what it's going to show is your revenue, all your expenses, and your net profits. Now, go back to the two items that we just discussed, right? If you don't have your unreimbursed business expenses and your profit and loss, your profits are overstated. You haven't added in those deductions yet. Also, if you haven't accounted for your loans and your merchant accounts or certain bank statements, you're also either over or understating your revenue or over and understating your expenses. And frankly, your profits are going to be garbage because garbage in, garbage out. Okay. So the way I'd like you to approach this is every time you enter in data, every time you enter in your bank statement, your money markets, your loans, your lines of credit, et cetera, look at your profit and loss and see what it looks like. All right. And make sure you ask a professional and your tax advisor to see what better methods you can look at to get more accurate profits, or, and or see how you can tax plan for the future and see what you can do before the tax year's over. Okay. All right. So we want to make sure you have reviewed your profits. All right. Finally, we want to make sure everything that we just talked about, you have the proper documentation. Save your bank statements. Okay. Save your credit card statements. Save your loan documents. These are secondary documentation. There's a big difference here. Secondary documentation will withstand an audit, but not always. For example, let's say you go to Costco or Target, where you can go in and buy diapers and dog food and wine and toiletries and a business shredder and business items, right? If you have an item like that, the IRS won't know what was actually spent there, right? So they're going to want a little bit more detail, which would be the primary receipt, which is primary documentation. And this would be any and every receipt that you have. So although you don't have to send the receipts to the tax preparer, it's your responsibility as a business owner to hold on to your primary documentation and your secondary documentation. But what you're going to want to do is make sure you're able to substantiate every single business expense. Additionally, every single business expense that you're being reimbursed for that you paid for personally. Okay? Essentially, you want to draw the line for the IRS where it says, hey, I'm not commingling, and hey, I'm keeping great records, and hey, look at me, I'm an awesome business owner that follows the rules. And in that case, you wouldn't pierce the corporate veil. So keep all your records. And we have other videos as to what the best ways to keep your records are. But this is so, so, so uber important because if the IRS man or woman comes knocking at your door, we want you to be prepared. And at the end of the day, I want you to be in control of your finances. And I want you to have all your ducks in a row so that when you submit your documentation to your tax preparer or CPA, you are already ahead of the game and you're honestly not wasting your own time or their time. And you're also saving on fees that the preparer may potentially charge you because you have incomplete information. All right. I really, really, really hope this helped and provided you value. Once again, please like, share with another business owner this video and comment below. I would love to hear your strategies for keeping organized before tax season. And also share with me something that you would like me to talk about next so that we can provide additional value and you are getting exactly what you're looking for. Thank you. Have a beautiful day. And I hope you're living life wealthier.